Good afternoon, ladies and gentlemen. We're here to talk about Greece and the reformation of its economic status and how it will affect the Greek real estate. And this is why we focus on Greece as a principle of rare earth. We see a transformation, and we have to identify that we don't call something rare because it is small, although many people would do that. We call it rare because it's difficult to replace. And this is a question that we will pose about Greece and its real estate. For Greece per se, is not rare because it's limited its size. It's a small country, the population is not that big, but it's mainly becoming rare because institutional grade assets, those assets that we would like to address on this specific timeline, is rare with execution certainty and are limited in supply. So what we are watching and participating actually from various aspects of the economy is that we have seen and we have genuine evidence of the investment grade that is restored. We've seen the bonds and the interest rates dropping, and we'll show you later on how this have reduced. The sovereign yield, there's a definite compression. A declining debt trajectory, where all things of the macros are consistently and improving throughout the previous years. So on the other side, we have a stabilized banking system right now after the post-crisis period, and definitely improved the cost of capital. So for us, it's not a cyclical rebound, but it's a repricing narrative that is changing. From the part of the macro stability, which all the institutional grade funds will have questions, we need to give them answers. We see that the capital, the real GDP growth, its forecast is up to 2.2%, which is it's a great for the European economy, and it's expected to lie between 2 to 2.2% for 2025 and 26. The trajectory, the decline in that trajectory of the debt to GDP forecast. You see how it considerably is reduced. Now, all these are shown here also in respect to the interest rates and the 10-year government yield. So the country risk discount applied here, it has narrowed. We have really compressed the risk premium. So why are we talking still about a country that is based on income driven, on big gains, when this same country belongs and has entered throughout the years, going through BB to BB and BBB plus right now, throughout all the agencies. So Greece moves right now from a tactical trade to a strategic allocation. And we see here, and we have together with us all the people that will talk about the framework, the construction, execution, the hotel management, and the capital allocation from the part of the developers. So the recovery is the narrative, and the market discipline for Greece is the structure of all these companies that these days offer the credibility and the certainty to deliver the product for the investors. So, where scarcity is forming in the Greek real estate. We see, and we have discussed throughout these moments that we are here, since today is the first day of MIPIM, that the permitted land is scarce in various areas. We have the urban certainty, what we can do within the urban limits. ECG grade stock still is limited, although the big companies are developing assets that reply to this aspect. Scalable hospitality. This is why we have a participant here specialized in this field. Purpose-built student living. It's another arrow spearhead of the construction economy right now. The silver economy formats in any form that we may consider it in Greece is of great interest. And of course, the execution capacity, because all these things come down to what the construction companies can deliver. So now the billion-dollar question, since we need to move away from possibly the 8-figure investments or 9-figure investments and see a greater part of the global funds investing in Greece. So we're not talking anymore about why Greece. This question has been answered throughout these years with the biggest of success, with such a success that we even see in the eyes the economies of Portugal and Spain, or the interest rates of Italy, a G7 country, being higher than us. So the question in 2026 is where to invest in Greece. So today we have with us, and I should like to start from the ladies of the panel, with Ms. Spilidula Boutou, which is the COO of MIPS Group, a prominent construction company, and Ms. Boutou will address the panel with her execution experience and how a construction company of such a scale tries to solve the problems throughout these years. On the other hand, we have Ms. Penny Zaglaridou, managing partner and founder of Wealthia Hotel Asset Management. You have worked with lots of brands, with lots of big companies, and in Greece, you should be the one who can answer things and questions for investors about the hotel and hospitality aspect. From the other hand, we have Akis Klavos, General Manager for the strategic investments on behalf of Enterprise Greece. Your past experience and past seats, together with your current role in the Enterprise of Greece, will give us the required answers about the institutional framework. However, last and certainly not least, dear Andronikos Tsatsidis, who has the seat of the Chief Investment Officer for DKG Developments. A part of the Greek capital, Piraeus, holds great projects for your firm. So here you are to address questions about the capital allocation and the financing. So let's go see how we develop the rounds. The first round is about the institutional and capital framework in the Greek real estate. So let's see the questions. Mr. Sklavos, from the perspective of strategic investments, what has structurally and irreversibly changed in Greece over the last few years that makes the country investable on a long-term duration basis beyond the recovery narrative, which we have left long ago. What would you say?
Thank you. Initially, I would like to thank you for having me here in this panel. So we have two major things. The first thing is that we have a major shift in the economic outlook. So as you already mentioned, by diving with some numbers, the first and most important is that now we have the investment grade granted from the major rating institutions. It was March 23 when the four out of them granted the investment grade, and the milestone was 25 when Moody's gave to Greece the investment grade. The other thing is that we have the 10 years bond yield of Greece standing at 3.3%, just 60-70 base points higher than the Germans. So we all understand that funds and institutional funds and pension funds and can see Greece as credible and as investable. Of course, you already mentioned the GDP, which stands in 2.2, and it is 1% higher than the average of Europe. And all this, along with some structural reforms, led to an increased FDI. So we have 7 billion of FDI during 2024. And it was skyrocketed during 25 at 2 billion. It is at 12 billion. It is important to state that 35-40% out of it accounts for projects that falls the real estate and the hospitality sector. Another thing is that this upgrading of the economic profile of Greece and the structural reforms led to increased strategic investments. So in enterprise Greece, during the period from 2010 up to 2019, we only had 10 projects accounting for a budget of 1.5 million. And from 2019 up to 2000, I'm talking about the real estate and hospitality sector, including databases and logistics developments. From 2019 up to 2025, we had 25 projects and a ticket of about 4 billion. And now we have a pipeline of another 15 projects and 1.5 billion in total budget. So I think that we all understand that Greece is seen nowadays as credible, as it is investable. There is a lot of greenfield projects developed by foreign companies. And along with structural reforms such as the digitalization of the permitting and changes in the judicial system led to institutional investors not really for the time being invest in Greece, but have a look on what is going on. In reality, I think that we are on a transitional period. We're shifting from the opportunistic approach of the first funds that was introduced to the market during the period of 2016-2018 to a more institutional approach.
Okay, so we could say that there's a proof, the history, what we have to follow these last years. However, there might be some restraints though, still. What would be one remaining restraint that prevents some institutional mandates from allocating in Greek real estate for the next few years?
Maybe I could state more than one. So one can say that difficulties in permitting procedures would be one thing, but in reality it's not the case, I think, anymore. Concerning the large-scale investments, greenfield, I'm talking about greenfield investments, we already have the tools in order to license such kind of investments. We have the legal framework of strategic investment and a number of changes in the spatial and the building and environmental legal framework, the creation of the cadastral archives and other changes led to accelerating the licensing procedure and the time frames for large-scale investments. Other thing that one can say is the judicial system, but I think that the Greek state addressed the constraint with changes in the operation of the courts, the time frames. Of course, all this happened in 2024 and 2025. We already see some results, but I think that it's going to be more clear in the next 2 or 3 years. But I think that what it is important and what stands as a question mark to the institutional investors is the fact that we don't have, in reality, enough large-scale investments, and we don't have portfolios of assets with large tickets in order to invest in. So institutional investors are seeking for tickets of at least 100 or 200 million, and they are seeking to allocate more than 1 billion in a country just to have...
So the billion-dollar question was right at this slide.
Yeah. So I think that in order to address the constraint, we have to move on with the development of more large-scale investments. So we need developers, and of course we need the real estate investment companies that could aggregate assets in order to create pools or portfolios that institutional investors could invest in.
Okay, I would say that this was one of the rare moments of the English language where we hear 3 buts, all with a positive reply. So, I would like to move on now. Thank you very much, Mrs. Flowers. And I would move to Mr. Tsatsidis. So, we have the institutional part in its perspective. From your side, though, of a large-scale development platform which has materially changed in Greece, that allows you to commit, what has materially changed in Greece that allows you to commit capital earlier in the cycle without pricing abnormal risk premiums?
Thank you, Theodosis, for the introduction and for the question. For us, the key change is the poor market visibility. Greece today is a total different story than it used to be 10, 15 years ago. We see a much better framework for financing large-scale projects. We see poor comfortability of international investments, both private and institutional, to flowing back in. We feel that currently our market has all the necessary infrastructure to become to exposure, let's say, it's self. So, as we all said, in the last period, we see a much better framework and institutional procedure in permitting also of large-scale projects. At the same time, we see that the demand for asset classes like residential and mixed-use projects is become more sustainable, let's say, in long term rather than a cyclical demand. And all these factors make the market interesting and appealing for big players.
So are you seeing longer hold periods and lower return thresholds, or is the duration still being priced cautiously?
We see a shift, a gradual shift between those two. First of all, yes, the last period, we see investors and developers that are feeling more comfortable to deploy capital earlier in the project phase. And at the same time, of course, yes, yield ROI remains a critical point, but everything comes down to disciplined capital deployment. And at the end of the day, it's a matter of finding the right balance between, let's say, the risk of time and the execution in the project. And this is the point.
Okay. So for such a company like yours, you see that this balance is easily addressable, or is it still you feel that you live on a threshold? Because we all feel that things on the institutional and capital framework has changed, and you prove together with companies that are present here in MIPIM, the Greek companies, that execution is sustainable, is doable, and offers a structure. However, when you are talking about this, do you feel that it's still a risky task, or is the water in the canal, as we used to say in Greece?
At the end of the day, it depends the strategy you wish to follow. But in the Greek market, we see that if we are analyzing bigger, let's say, players from abroad, family offices, institutional investors, high net worth individuals, other developers who would like to jump in, this is absolutely possible. I mean, it all comes down to discipline execution. First of all, the right planning of the project, which is the A and the first and the last letter, let's say, of the development horizon. Planning means that what asset type, where to buy, what asset type, what is the right price, and what is the uses. You will the blend of the uses, etc. So there are investors who are looking short term, long term, but we see, and this is what our market performs the last couple of years, that it can attract not only small investments for short-term horizon, but we see that developers, investors now feel more comfortable to commit money for earlier in the project, because it is more safe, let's say, market. And can you repeat the second part of the question?
So if you feel that this risk is really a big task for this scale of development firms, or is it something which is calculated based on the strategy?
The risks always exist. You cannot avoid the risk. What you can do for the risk is you can in advance be prepared by making a structure of the investment right to be let's say to be alive, let's say, okay, in any part of the development, to make the right blend of uses, so your developments will not be affected from the market standards, but again, can be adjusted, and of course, all of this is manageable.
Okay, so you mentioned that it's all based on strategy, and this is what we try to address. That change in the Greek economy means that we have to change focus in the strategy and the capital that we are addressing to be allocated in Greece. You mentioned with your own words that there are differences with higher risks and small-scale developments, and now we have to expand and to invest earlier, and you do that. And we have to shift at this point the questions to the execution. And this is why Spiridoula Boutou is here. So welcome, Spiridoula.
Yeah, welcome. Thank you.
We need to know at the project level, what is the single most decisive constraint that today determines whether an asset can meet standards for institutional grade investments? Is it permitting? Is it construction cost discipline? Are there delivery timelines? Things that try to address Andronikos earlier, but it's your time now to shine with your capacity and tell us your perspective.
Okay, first of all, it was really nice to hear how you started the conversation, that you don't reply now to the question why Greece. So I think this, as a concept, is the basic change that we have seen in our country. I mean, there are in different sectors, but real estate is, as you know, an enterprise also, is one of the basic pillars of the Greek economy, as well as of tourism. So I would say that all steps have been done, like you have, all three of you addressed and highlighted. However, we need more. We need more. Stability, of course, we have in terms of economy. Something that the institutional cannot assess is uncertainty. Of course, the planning, we have seen several changes. We need more in this concept. Time of delivery, as you have said, is also very important. The construction cost, which has been increased the last years, but it's all over not only in Greece, in other countries as well. It's a basic parameter. But I would say the point of uncertainty. If, for example, somebody goes and issues a planning permit, we consider that this is done and so you are covered. However, sometimes this is not the reality. So I would say that the basic point for institutions is to know where to invest. Like I said, that in terms of types of properties. And no surprises, yes. I would say that
So what actually differentiates a project that institutional capital can scale into from one that is and remains locally financed?
has already been addressed.
Yeah, but we need the execution.
Okay, the scale and is the most important. In Greece, there are a lot. Okay, we're very experts and we have very good technical expertise. We are very famous abroad as well. I mean, in the Middle East, we used to have construction companies from Greece exporting and apart from material and expertise. So, because of the earthquakes, again, we have very good technical knowledge. And I think even if the construction, the development side, we have a lot of small developers. Because we're, in Greece we have very small, medium-sized companies. All of them, quality-wise, they have a very good product. So this is the basis. So everybody should feel confident that even though if it goes to a smaller developer or a bigger developer, this is very safe place in terms of construction and of delivery. The basic is size that, for example, in specific areas like in Athens, apart from, of course, Elliniko, which is the biggest in Europe, there are no very big zones that you can have a large-scale product.
So this is a question that has to be resolved by the state in various forms. So it will give you the land to develop.
Exactly. And
Vision to develop.
in terms of time, of course, and the speed.
Right. So for the moment, we have discussed your part of the execution and how the capital framework, institutional framework readiness performs. Let's look now into the hospitality sector. And Penny would put up in. So are we seeing a structural shift in the Greek hospitality from those who were yield-driven to platform-driven, to institutional strategies, and long-term ones?
We are in a hybrid transition at the moment. We have not shifted yet. We are not there yet. The basics still matter a lot. Growth assumption, seasonality, average rate, occupancies, planning. Still matters a lot when someone is looking at the hospitality. And although lately we are seeing major institutional interest in coming to Greece as investment as well, these yield parameters are still, which they are very structural and very traditional, still matter a lot. Enterprise Greece is moving in a direction going on global events and promoting investment opportunity in Greece. And the message there is very clear. Greece is moving beyond single asset investment to transactions for larger investments. However, a lot of parameters are still there for us to look at and consider. The seasonality in Greece exists. The majority of our hotels are seasonal. Seasonality can be very profitable. We see our resort hotels and coastline hotels as well, the peak period, achieving exceptional occupancies and premium rates, bringing up heavily the profitability ratios. And then we have the urban hotels. 12 months seasonality now, they work like a year. You can have predictable rates, predictable occupancies. And that balance out the cash flow. So we have both areas where you can easily and predict and stably predict what you're gonna do. So you have resort profitability, urban seasonality. However, access and operating cost increase, it's a major aspect. Something that an investment will consider a lot. But what they look as well is that the demand is not weakening. Greece is attracting global interesting at the moment and constantly performs and constantly have increasing demand. So that's very important. Therefore, with the right strategy, with a quality, with a branded asset, and a quality asset, the fundamentals are there.
So where do you see the next opportunity for institutional investors and maybe more defensible, I would say, value creation?
Look, we have, there are the brownfields and the greenfields. It is what it is, there is nothing we can do there. Both are in the game. The greenfield, however, for me is the new frontier. It is absolutely vital. Imagine this. 10 years ago, you could come to Greece, you could buy a property half its value. And then you could leave tourists bringing up your hotel to live. This was done back then. Today, you cannot find these cheap hotels at all. They sold, they're gone. So the supply is very limited. There is no major supply on the brownfield, but you can find it in a good price. There are, however, still 3 and 4 star hotels that they are independent, unbranded, and in a great need of upgrade. So, if we could go to the brownfield, I would say these are the opportunities there today for an investment.
For a perfect reposition.
Exactly, to reposition. So,
And even if you allow me to say, even an opportunity to consolidate.
absolutely, for a short-term investment, repositioning. You go, you get it, you reposition it, it's fast to win. Okay. And then you have the greenfield. The greenfield is the smart new tomorrow for me. So someone needs to be very careful, however, because the coastline plots, lands, they are very limited as well. We don't have many supplied of quality trophy coastline plots today. All the major companies, they are looking in the Mediterranean for these trophy plots. Therefore, the investment needs to be very carefully calculated and looked at. And what's happening is that because of the planning uncertainty, of the regulations that are changing in Greece almost every day, we are seeing today investors that they are not looking on the greenfield. However, the greenfield is today's opportunity, tomorrow rare finding. We will be sitting here in 10 years and we will tell our investors that the greenfield that you were not looking 10 years ago because you were scared, you were not, it's your opportunity and you cannot find it today. So to sum it up a little bit, if you are a short-term investor that you would like to look at your short-term investment, you go to repositioning. 4 to 5 years, you get your money back. It's very easy and very secure. If you're a long-term investment, you go on a high value earnings, and there the question is timing. How long you can wait? Because the rest is there, the recipe is ready, the demand is here, the customers will come.
The economy is here.
The economy is here, everything is here, the government is changing a little bit, enterprise Greece is bringing up institutional attention. It's a matter of the investor to say, how long am I going to wait to get that upper top on my investment?
And as Spiridoula begin her reply, you also end with the same reply that you are talking about the how
Yeah.
and the where.
The where and the when.
And the where.
The when.
The location.
If I would like to finish up in 3-4 years, I'm going to reposition. I take an old hotel, I fixed it, I sell it,
And these are different kind of funds.
Exactly. But the real value and the good earnings, greenfield.
Are in the long term, in the long term developments. Yes. And
Sorry, can I add something to
of course.
you said that? I mean, of course, hotel. I mean, Greece will have the best coastline. It knows better. But in terms of the government, I mean, it's also the transportation to this coastline, which is very important. It's something that we should point out as well. I mean, more better roads, for the transport for the tourist to come easily.
The accessibility it is, but the accessibility is major to investment. Major. This is what I said in the beginning. The basics still matters. Seasonality, accessibility, how we will get there.
It does, and as we see, the government already completes major road works national roadworks and allows us to implement or to envision, we would say, since we're living in the early dawn of this new stage of the investment grade Greece, so we can expand or consider our coastline expand. Because if we get comparables from Italy, from Spain, from Portugal, they don't enjoy this type of coastlines that we have, for example, in Peloponnesus or in our Caribbean islands, which are the Cyclades and all the islands that we have in Greece. But being a country where the maximum distance from the shores are less than 100 miles, and we don't have to discuss about 160 kilometers. We're talking about 100 miles distance, which is minimum considering the distances that foreigners would like to have to get access to the shores.
The fact that the government has already many steps. So
Exactly, and we already see small developments and expansion into the winter tourism. So we are, we could say, a blessed country in terms of geography. It's a matter of time for us to see how we can take advantage of this geography, of this topology, and perform what we are worth to deliver to this world. So, obviously, Greece is no longer this optional. It's, we could say, selectively scarce. We have to identify where to locate, how to locate, and have the certainty from the part of the government to be able to execute in specific timelines and have specific yields based on the strategy of investment of each country. So, in hospitality, what at the end of the day defines the difference between growth and structural maturity? Because we discussed about the ground fix in the short term and the structural maturity is something for long term. What will make it different? Can we narrow down this thing? Because I feel that investors of that scale have to understand that the firms and the people in Greece are the ones who can deliver the yields that they need.
Look, there are far too many ways to scale up the growth. First of all, branding a property. It's a major aspect. When you brand a property, immediately you can top up on the average rate, value the asset higher, and then when you do an exit, you get a premium on your exit from the asset you have. Secondly, you have to scale up a little bit on areas where you know that you will scale better, like urban hotels, 12-month occupancy, stable average rate, you know where are you going. The resort properties. We call them resort worlds these days. We scale up when we do a lot of additions, food and beverage, excursions, spa, children activities, everything where you can get a lot of your revenues adding up on your profitability. So there are a lot of areas where one can add in the profitability, scaling up, using scaling up models in order to increase the profitability.
Okay, so in respect to execution level, Ms. Putu, what is the one discipline that, okay, given the fact that we may have the government solve some problems or all the problems, what must not weaken under growth pressure at the moment if institutional capital is to scale? What is for your side the one discipline that must not weaken under growth pressure at the execution level? Where do you have not to step back and be aligned, fully aligned, focusing what?
Quality delivery, the quality delivery of the project, time, in terms of time, to keep the promise that you have made to your final users and end users in advance. I mean, you have to deliver what you have promised. This is also what we say in our company. Deliver what we promise. So this is to be honest on your, in advance promise, because a lot of people also in Greece buy in advance of plans. So there is also something that they are thinking about. So I would say that in one line, because deliver what you have promised.
And from the capital allocation standpoint, and your side, Mr. Tsatsipas, what would make you increase the duration in the investment in Greece over the next 24 months? Make something bigger, make something great, make something shining far further and more away than what this current economy and the current players have delivered.
First of all, we see that the next period, the investors already feel more comfortability to invest, more comfortable to invest in a more long-term horizon, because there is a belief, there is first of all a fundamental good infrastructure in our country, and investors believe in that. Probably in terms of the key driver, I believe it could be the country's execution capacity. Means that the emergence of large-scale projects with institutional great quality. And if as a country we execute that kind of assets, definitely we will see different behavior from investors that will feel total different, more comfortable than now, as we expressed earlier, to dive or to allocate capital earlier, in an earlier stage, and etc. So the key fact would be this, to focus on large-scale mixed-use developments in order to cover the needs of the market that have been created the last couple of years due to the crisis, due to a couple of other reasons, and this is the main point, which I believe is already under its pathway, let's say.
Yeah. So, trying to close this conversation, we have to understand from the part of the state what must Greece prove, and not just declare, what we have to deliver and stick to our promises and not just our words, to move from selective allocation to something which is truly scaled, truly long-term, and perfect for institutional position.
So I think that now we have the economic profile as a country. There is a lot of opportunities arising from different sectors of real estate and hospitality across the whole Greek territory. We have the political stability. We are too close to the geopolitical turbulences, but we are not touched due to the fact that we belong to the western part of the east, if I can say, if I can say it that way. And I think that the state already delivered a lot of structural reforms in order to facilitate and to accelerate the licensing procedure. And I have to state that Enterprise Greece is here, and if you need any kind of help considering large-scale investments, tools, how to do it, and even if you have specific problems, we are here to help you to find out a solution. But at the end, I think that there is a lot of money floating around the world and they are looking for opportunities. The problem is the depth and the liquidity of the market. So today, in order to scale up from the opportunistic funding to more institutional players, what we have to do is we need developers, so we need developers in order to create new greenfield large-scale projects, as already Penny mentioned. We need asset aggregators, we need companies that they will bundle hotels, mixed-use integrated resorts, and other kind of assets, and to create products for institutional investors to start to come and invest in.
So, I would say that this conversation solved or offered us in the most prominent way solutions to various buts. You mentioned how these past years the construction firms and the hotel sector performs. So, 10 years ago, the debate was if we were going to survive. We felt it to our skin. 5 years ago, it was recovery. But today, it is discipline. It is structure, it is certainty, and it is right pricing on the execution. So here we are at Greece 2026 with companies that deliver on every aspect, on executives who know the business inside out, not only for Greece, but in very strange situations and climates and business and development environments all over the world. And we are here in our own country to open up this framework to money and to investments that this place has never seen again. The billion-dollar question, the expansion, the development, as you, Penny, said, is not something of the future. It starts to happen now. It might be foggy, it might be an early dawn, but we are here and we have to invite this smart capital, this long-term value capital to explore the opportunities under any aspect and for every possible reason.
And to add on what you're saying, we are experiencing today, it's very interesting, all major international hospitality brands, almost all of them, ranging from soft brands to traditional brands to ultra luxury brands, they are in Greece. These brands, they are not expanding heavily, they're investing and expanding in Greece. They're not expanding for the high average rate of the summer or the short-term gain. They're expanding because they see long-term potential in a market that constantly performs. We're experiencing the last 10 years a market every year to perform better and better. So that proves the strength of the market. Major brands, they're all here and they're expanding heavily continuously.
And as one representative said at the previous panel about the branded residences, this is not a saturated market. We're just beginning. There's
Yes.
a lot of
yes.
space to open, and it's inviting, and Greece is inviting this capital to be allocated.
And we are seeing the traditional hotel owners slash operators, because we all know that especially in the resort hotels, it was someone that had the land and became a hotelier. They didn't have the structure of a hotelier, but became a hotelier. They did something correct, because we are here, we are today. So we are seeing today an increased interest of the next generation of hoteliers, of these owners, that they are all believing in the branded hospitality, I would say, residents that we say in the previous one. Both of them, they realized that bringing the structured brand, the structured brand standards, we can have a little bit increase in your profitability and your asset value.
It's good to know, and I would end my presentation saying that what we live in Greece is what this picture behind the participants show. Greece used to be here at the bottom left with a short boat lurking around the sea. Greece of 2026 is the right one, sailing to the north and sailing to the bigger cup. Thank you very much for participating.